It is more interactive and you can directly talk with the speaker. You can ask anything related to GST, not only the current reforms. You can ask anything related to GST and all the tax related questions. Also, you can use this Q&A option, which we can cover questions easily. It is easier to cover the questions from there. So good evening, everyone. My name is Pawan Kumar Sahu. I handle product marketing at Websol. I will be your moderator for the day. Before we head into the webinar, I would like to give you a small introduction about my company that I represent from. I'll try to keep it short. So this is our today's webinar. So Websol was a part of Wipro back in the days, and we were printer manufacturing division in Wipro, and we are specialized in dot matrix printer category at that time. Over the years, the company also decided to step out of Wipro and form a separate entity with the name of Web Solutions. Our signature offering, managed print services, was carried over 2 decades with evolving needs and changing market trends. We decided to bring digital workplace solutions to our portfolio. We expanded our service portfolio and the product portfolio to cater to mass markets. So I'd like to highlight one of the milestone in our journey that we underwent complete brand transformation, and we are now called as Websol. So you can see some of our highlights here. We have over 25 years of experience in this category, and we have over 500 plus enterprise customers. We are present in 2000 plus service locations in India. You can also see some of our awards, DMS Solution Company of the Year, and you can see some of our clients also, which we have presence with Tata Capital, Metro, HDFC, etc. Moving on, this is our workplace intelligence workplace suite that we say, which is FluidWorks. FluidWorks covers all the services, which you can see Fluid Pro, Fluid Print, Fluid Map, Fluid Trail, and Fluid ERM and P2P services. The main highlight of today, we are representing from the floTax, which is GST management platform, which you can use it for filing your GST and doing reconciliation, EOA bill, e-invoice, all the processes. So I would like to launch a quick poll for you just before we go into the webinar. If you are interested in floTax, which is a GST management platform, GST automation platform, we will tell you exactly how to automate your GST process. You can click on yes so that my team will contact you and they will explain the demo, pre-demo. It's a free demo and they will explain how to automate your GST and all the processes. Here we are providing the demo of GST filing, reconciliation, e-invoice, e-way bill, the new IMS, tax automations, and all the changes that are happened in GST 2.0 are updated already in our platform. So if you are interested to know how exactly the automation part of software part of GST works, you can click on yes, reach out to me. My team will contact you and they will explain to you everything. They will tell you how to automate your GST process. Most of the, according to some survey, mostly 60% of the businesses, they still do manual GST filing. So which is time consuming, which is the resource consuming. So we want to remove that angle. We want to bring automation or the semi-automation part of GST, and we want to reduce the time and the efficiency of to increase the efficiency of the companies. So if you want to be part of this, you can click on yes, reach out to me in the poll box, and then we will teach you how to, we will tell you exactly how to automate your GST. So the poll will be ended in another 1 minute, audience. Meanwhile, you can contact to me at pawan.sahu@websol.com also after the webinar. Okay, I'll be ending the poll for some time. Okay. Let me see a few questions. Okay. Audience are interested in credit note with old rate, any changes in GST rate and practically stickers. Okay, we will be covering this. So moving on, I would like to introduce our speaker of the day, Mr. Akella Prakasa Rao, sir. Mr. Akella is an independent indirect tax advocate. He graduated in 1989 from BITS Pilani in electrical and electronics engineering. He is also a gold medal holder who completed LLB from Andhra University in 2001. And he is having more than 27 years of experience in the field of indirect taxes with exposure in government, consultancy, and industries like auto and pharma. It's an absolute pleasure to have you here, sir. I'm sure audience also looking forward to directly hearing from you. It's been already time. Over to you, sir.
Yeah, thanks, Pawan, for the introduction, and thanks after a small gap that we are back again. And this time it is on a very good topic that the GST 2.0 has been ushered in by the government with a lot many rate rationalizations and some of the process changes also, which we are going to cover during this session. For the next 40 minutes, maybe that we will be rushing through all the announcements that are made, because so far no notifications or circulars, instructions, nothing have come in the public domain except for the press release. So based on the press release, people are going gung-ho about it, but exactly unless you have the notification in hand and see the language finally, that we will not be in a position to take any kind of concrete steps. But however, that we should be prepared, hence we should know like what are the changes that have been proposed and how the final wording is going to be, that we can wait and watch. So for the time being, we are going to concentrate on the press releases only, and based on the press releases, what is that we have to gear up. That is what is going to be the session that is going to cover. Next slide, please. The 56th GST Council meeting held in New Delhi on 3rd and 4th September marked a pivotal moment in India's goods and service tax regime. Convening after 9 months hiatus, the session introduced significant changes, aptly termed GST 2.0 reforms, encompassing rate rationalization and crucial policy decisions. Key documents detailing these reforms, including the HSN-wise and sector-wise rate adjustments for goods and services, along with the trade facilitation measures, were released via annexes to the press release dated at 3/9/2025. Additionally, an FAQ was also published to address the common issues. Annexer 1 and 2 will give you HSN-wise changes for the goods and sector-wise changes for the goods. Annexer 3-4 are HSN-wise changes and the sector-wise changes for the services. Annexer 5 will be the comprehensive trade facilitation measures, which we will be touching upon largely in our presentation, because rate changes you can always see in the annexes only, because there are many products that they have touched upon. Furthermore, the council has recommended that 30th June 2026 as the limitation date for filing the backlog appeals, with the principal bench of GSTAT designated as the National Appellate Authority for advanced ruling. So, all the GST appeals which are to be filed with the GSTAT, the last date is going to be 30th of June 2026. Let us hope that by the time the online filing system is going to be ready without any kind of a hiccups, that we should be able to file whatever is the appeals that are pending as on today. And the National Advanced Ruling Authority, the National Appellate Authority for Advanced Ruling is a new concept which has been introduced. So far that we know it, these advanced rulings have created a lot of ruckus in the market, that one state giving a different direction, the second state taking a different kind of a position. Hence, a trade doesn't know when you are working in multiple states, because the ruling is applicable both for the authority who have issued it and for the party who has litigated the matter. But when the same party is working in two different states, if they end up getting two different views, then it becomes all the more difficult. Hence, this kind of things were there. And apart from that, in the same state that I do not want to name, and I do not want to name the issue also, because most of you must be familiar, because we have discussed on this issue several times in the past also. On the same service, under the same circumstances, two different persons have received two different orders from the same set of officers, which has created confusion in the market, and the matter was taken up at the highest level. But nevertheless, because of the law that it is binding both on the party and on the government, then they have to come out with some alternative, and that could be the National Appellate Authority for Advanced Ruling, which GSTAT principal bench at Delhi is going to be. So what happens when you go for an advanced ruling at the level of the first level, that you will get a ruling, but if you are not happy, then you will be going for AAA, that is Appellate Authority for Advanced Ruling. So that is going to be by the commissioner, the SGST commissioner and the CGST commissioner, both will be sitting in the appellate bench and they will be ruling it. But if you are not happy with that, then there is a National Appellate Authority for Advanced Ruling. So there is going to be NAAA ruling also will be there. That is at Delhi. So you can go against this decision with National Appellate Authority for Advanced Ruling. But what are the other modalities? If the same company is getting two different orders, whether they are going to have any kind of a jurisdiction or not, is something that we have to wait and watch for the final notifications that are to come in this coming week. Next slide, please. So goods related amendments that they have brought back this retail sale price based GST levy. So far after the introduction of the GST, GST is always levied on the price at which the goods are being sold. But suddenly that in the erstwhile central excise regime, that you were having this MRP based levy, wherein that maximum retail price, once you have declared it on the product, then based on that the excise levy used to be applicable. Now that they have brought back this RSP levy into the GST also, but this is applicable only for those sin goods which are going to attract the highest rate, which we will be discussing in the next slides. So like pan masala, gutka, cigarettes, unmanufactured tobacco, chewing tobacco, jarda, and moving away from the transaction value, it is going to be the RSP based GST levy on these products alone. And ad hoc IGST exemption has been granted for new armored sedan imported by the President's Secretariat, which is not very much relevant for the public. However, because it became the second point in the whole press release, that everybody was thinking like, what is this ad hoc exemption given suddenly? But it's a one-off case. And service related amendments, restaurant services, there was a clarification. Explanations have been added to the specified premises definition to clarify that standalone restaurants cannot claim this designation, preventing them from availing 18% GST option with ITC. And similarly, lottery valuation alignment, amendments to the GST valuation rules are being undertaken to align with the changes in the tax rates applicable to the lottery tickets, ensuring consistency in tax computation. But unless we see the final notification, I don't think that it is appropriate for us to do any kind of a guesswork at this point of a time. Hence, let us wait, because this particular webinar is going to be continued once the final notifications are made in the public domain. So after 22nd September, as and when it is convenient for you and as well as for Websol, maybe that we can have the final picture, and the GST 2.0 reforms will be discussed once again, wherein the final law, language, everything will be with us. Next slide, please. So some of the facilitation measures for the trade, they have said that in 3 days you can get a registration, but that is applicable only for the low risk applicants, where the output liability is not going to be more than 2.5 lakh per month, and it is a easy entry and exit. And the expectation is 96% of the new applicants will benefit from this. All the unless the final notification comes, we can't be sure that whether it is really a trade facilitation measure or not, because earlier instances also, whenever they have announced that the registration process is going to be simplified, it has become all the more complex. So but this time, that for select few, that this 2.5 lakh per month is the criteria, that how it is going to be implemented, that is something we have to wait and watch. Next slide, please. And other measures are that for e-commerce suppliers, simplified registration for small suppliers through e-commerce operators for supplies across multiple states, addresses challenges of maintaining principal place of business in each state, detailed modalities to be placed before the GST Council, and it teaches the compliance and facilitates the e-commerce across the states. So the key bullet in this particular slide is detailed modalities to be placed before the GST Council means this is not going to be announced with immediate effect. So definitely it is going to be placed before the GST Council. Maybe after the 57th GST Council meeting, we can see something on this aspect. But till that time, I think it is going to be a deferred move only. Place of supply provisions, amendment for the intermediary services. Somebody had already asked this question, that is there any change in the intermediary services and what it is going to be. So they said that the omission of clause B of section 113(8) of the IGST Act, place of supply determined as a location of the recipient and helps Indian exporters claim export benefits. This is what is all about intermediary. When it comes again, we will touch upon that in detail. And regarding the post-sale discount amendments, they said that section 15(3)(b)(1) is going to be omitted, and then 15(3)(b) credit note requirement that they are going to amend, and then ITC reversal mechanism also that they are going to change, and they are going to rescind the circular 212, which has garnered a lot of adverse publicity. The government has decided to rescind this circular. Next slide, please.
Okay, audience, we have a poll for you. I'll be launching a poll on your screens. So the poll on your screens, guys. What sectors face historical disputes on inverted duty refunds? FMCG and IT, fertilizers, textiles, banking, insurance, telecom, and pharma. Please type your answer in the poll box, audience. Also put all your questions. If you have any questions as of now, you can put your questions in the poll box, in the chat box, or we have a dedicated Q&A box, which will be easier for us to pick up the questions. You can type in the chat in the Q&A box, audience. We have a dedicated Q&A session at the end of the webinar. So we will be discussing all your queries, all the doubts related to GST 2.0 and the 56th GST Council meeting clearly over there. We may a little rush over the PPT slides, but everything will be clearly discussed in the Q&A session. Okay, the poll will be last for another 10 seconds. We have a differentiated answers. We have splitted answers all over. So, sir, you have anything to tell about the answers, sir?
Yeah, not even half of the participants have participated in this. That why the others are diplomatically silent. There is a very simple question. If somebody is following the news items and all that, so but nevertheless, the majority of the people have selected it correctly. Fertilizers and the textiles are the sectors which have suffered a lot on the inverted duty. So this is the right answer is fertilizers and textiles.
Okay, over to you, sir.
Yeah. So, phased implementation of the GST rate changes. The council recommended implementing the GST rate changes for the goods and services from the 22nd September 2025. However, considering the need for funds to meet the compensation cess obligations, a phased approach was adopted. So, by seeing the title, don't be worried that all the rate changes are going to be effective from 22nd September 2025, and hopefully that by the time that notifications are going to be out, but only in the case of the sin goods that it is going to be a phased implementation for the GST rate changes. So the what are those goods? Pan masala, gutka, cigarettes, chewing tobacco, unmanufactured tobacco, BD will retain the existing rates until the compensation cess loan and the interest obligation are fully discharged, and the Union Finance Minister and the chairperson of the GST Council will determine the actual transition date for the revised rates on the aforementioned specific goods. And while during the press conference immediately after the 3rd September 2025 meeting, that when Madam has addressed the public, at that time a query was asked that what can be the tentative timeline. So she was having the hope that by end of November or at the most by December, that this old rate will go and the new rates are going to be implemented even for these sin goods. So pending CGST Act amendments CBIC will administratively begin implementing the revised system of 90% provisional refunds arising from the inverted duty structure based on the system-driven data analysis and risk evaluations, similar to the zero-rated supply refunds. So the 90% immediate provisional refund option is going to be extended even for the products which are covered under the inverted duty, because now after the rate rationalization, most of the products might be under the inverted duty. Of course, over a period of time, the inverted duty refund scheme is the number of items under the inverted duty refund are going to decrease, but for the time being, that there will be many. Hence, that the government has taken a right step to grant 90% of the amount claimed provisionally without subjecting the application to any kind of a scrutiny immediately on filing, but the later 10% will be released after the scrutiny. Next slide, please. So, particularly on the Annexer 5, enhancing the trade facilitation, some of the important items that I'm just bringing it to your notice. It is a risk-based provisional refund sanction is something that they are going to implement for the zero-rated supply of goods or services, exports or supplies to SEZ units for authorized operations. So, and the same thing is going to be applicable even for the inverted duty structure also. And GST refunds for low value exports, there is going to be an amendment to section 5414 of the CGST Act, removing the threshold limit for the export refunds, particularly benefiting the small exporters using courier or postal modes also. So the earlier restriction of less than 1,000 rupees may go, but what is going to be the new law and what is going to be the new limit, unless we get the notification, we are not very clear. But that is going to be one good thing for the small players. And simplified GST registration scheme, which we have already discussed, but it is going to be operational from 1st November 2025 onwards only. So till that time, the old regime will continue, but from 1st November, only for those specified registrants who are having less than 2.5 lakh per month ITC, only for those people, this simplified GST registration scheme is going to be applicable, wherein that they will get automated registration within 3 days of submitting their applications. Next slide, please. So simplified registration for the e-com players also, as I told you, that unless we see the final picture, that we will not be able to say much. As far as the intermediary services are concerned, see, previously the intermediary services, the law said that it is based on the recipient. So when a intermediary based on the supplier, not the recipient, sorry. So based on the supplier. So when an intermediary in India is supplying anything outside India, then it was never deemed as an export. So in all such cases, then the intermediary services were subjected to the GST, domestic GST. That has created a lot of problem, because intermediary is a person who is also exporting his services, and it should not have been subjected to the tax within India. So this has created a lot of ambiguity in several sectors, particularly in the IT. So the government has taken cognizance, and now that they have deleted, they are proposing to delete these clauses, so that the intermediary services are going to be now taxed on the place of supply of the condition is being the place where the recipient is going to be. So when an intermediary supplies the goods or services to outside India, then the recipient happens to be outside the tax jurisdiction, hence it will be deemed as an export. But the corollary for it is that if intermediary in foreign territory is going to give any supplies, then it is going to be subjected to the reverse charge mechanism. But such kind of instances are very less. But in all such cases, that it is going to be a reverse charge mechanism, wherein that whatever the tax, it is going to be a cash flow issue only, but that is the corollary of it. So when you are considering intermediary under the default rule that place of supply is going to be the place of the recipient, then the fallout of it will be that the foreign intermediaries when they are supplying their supplies to India, then the Indian recipient has to pay the tax under reverse charge mechanism. Next slide, please. Yeah, post-sale discount amendment is something that unless we see the fine print, that we will not be able to really take a position, because what they are saying, they are going to remove the requirement for establishing the discounts through a prior agreement or linking them to specifically to a relevant invoice, and simply they are going to simplify the process is what they've said. You know it, when you want to issue a credit note, the rule says that the credit note should be linked to the original supply invoice. So unless you mention the original supply invoice in your credit note, then the relation will not be established. And also that whatever is the credit note that you are giving for all post-sale discounts and all, there should be a prior agreement to be in place. So it has become very difficult for the industry to follow the credit note procedure under GST. Hence, the industry has come out with an option that why can't we settle the matters through financial credit note? But financial credit notes, as you know, that has run into a lot of problems. In fact, in 2-3 of my webinars that I have covered this with extensive examples also. Financial credit notes is an area where the GST is not going to be touched, but people are settling their account books. But this has created a ruckus with the department also, because then you give 100 rupees supply with 18 rupees of GST, and subsequently, because of some issue that there was a credit note for say 50 rupees with the 9 rupees GST. But instead of giving a credit note with 50 rupees and 9 rupees GST, that if the company resorts to a 50 rupees of financial credit note, then the books and the recipient end will reflect that the consideration paid towards the goods 100 minus 50 is going to be 50, but the GST tax paid will be on 100, it is at 18. So this is going to violate the rule which says unless you pay the full consideration, you are not entitled for the full credit. So in financial credit notes, this problem was always there, and revenue has issued notices in several places where the matters were settled through financial credit note, and the books have reflected a lower value after adjustment of the credit notes, which has led to a lot of problems. Hence, the department, the GST Council has taken cognizance of these issues, and they are coming out with a clarification. But unless we see the final print, that we will not be able to comment whether it's going to really address the concerns the trade has. It mandates that discounts must be granted via credit note issued under Section 34, and it will be correspondingly amended to ensure that ITC reversal by the recipient when a post-sale discount reduces the value of supply via GST credit note. And the circular on the post-sale discount issues to eliminate the ambiguity and potential legal disputes, the Council recommended issuing clarification on several key aspects of the post-sale discount, non-reversal of ITC on post-sale discount through financial or commercial credit notes, treatment of post-sale discount from manufacturers to dealers as additional consideration, implications for transactions between dealers and end customers, and treatment of post-sale discounts as consideration for promotional activities. And rescinding of the circular 212, which provided a mechanism for compliance with section 15(3)(b)(2), it will be withdrawn, and further simplification is going to be there in the regulatory landscape. So hence we have to wait and see how this is going to pan out. Promise is good, but whether it is going to be delivered as per the words is something that we have to wait and watch. Next slide, please.
Okay, audience, there is another poll going on in our LinkedIn page. I have pasted the link in the chat box. You can see. You can just click on the link and then you will be redirected to the poll that is happening in our LinkedIn page. Just click the link in the chat box and you will be taken to the poll directly in our LinkedIn page. Which reform was introduced in GST 2.0 to speed up refunds? Manual verification, blockchain audit, automated refunds in 30 days, quarterly reconciliation only. click the link from your chat and you will be directed to the LinkedIn poll that is going on in our LinkedIn page. And please enter your answers, audience. Also, to know more about GST updates, the changes that are happened in GST ecosystem, and all the trends and everything related to tax, all the fresh updates you can find in our page. Please follow our LinkedIn page in which is named as Websol and the floTax, so that you will be updated with all the updates related to all the updates, blogs that we produce in the LinkedIn. So once you complete the poll, you can you can follow our LinkedIn page, which is Websol and floTax. And all our webinars will be updated in the LinkedIn page as well. We conduct these webinars every monthly once. So the dates and the topic of the webinar, everything will be updated in the LinkedIn page. So please follow the LinkedIn, audience. Okay, we can move on to the next slide. Over to you, sir.
Yeah. So there are more participants today. I do not know that you have got the full idea of what are the changes that were proposed, except for Anil. I could not see anybody else having any kind of a queries. So if you have got any questions on that, please post your questions in the Q&A box so that at the end of the session that I can take up. So the RSP based valuation, the council has recommended the RSP based valuation under the GST for the specific goods, which we have already discussed, and the relevant notification will be effected to formalize this change, aligning valuations with ultimate consumer price. So this is going to be a fundamental change in the GST, that first ever time that the RSP valuation is going to be brought back, which was there in central excise regime. So they are going to bring it back again. But when it is going to be, how it is going to be, is going to be a question, because on 22nd September, when all other rates are changing, but on the SIN goods, the old rate with compensation cess is going to continue, because compensation cess will be continued for some more time till the government repays the loan with interest taken by it. So that is going to happen by November or December, as per FM's post press conference. So if that is the case, from that time onwards, the SIN goods are going to attract the special rate of 40% without any compensation tax added on them. So from that time onwards, maybe the RSP based assessment valuation comes into the picture, or from 22nd itself it is going to be implemented. That is something which we have to wait and watch. So along with these 5 annexes, the government has also released an FAQ, because thinking that people will be having a lot of doubts when a new changes are being proposed, the government has anticipated certain queries from the SSEs, and they have already given their version that how it is going to be. So some of the questions and the answers that I'm just bringing into your notice, that what happens to the applicable tax rate if the goods and services are supplied before the GST rate change, but invoices were issued later. This is a very popular question whenever there is going to be any kind of a change in the tax rate, that you know it, that it is a majority rule which has to be followed, because that there are 3 key events in a supply. One, the supply itself. Second, issuance of an invoice. Third, receipt of payment. So there are 3 things in a supply. One, the supply itself. Second one, that a commercial invoice issued on that supply. The third, the concerned payment against that invoice. So if any of the 2 events happen before the rate change, then it is going to be the old rate. But if any 2 events, our 2 out of the 3 events happen after the rate change, then it is going to be new. So which you all know it. So as per section 14A1 of the CGST Act, the time of supply, the date of liability to pay the tax is determined as follows. If payment is received after the rate change, the time of supply is earlier of the date of payment receipt or invoice issue date. If the payment is received before the rate change, time of supply is the date of payment of receipt. So this, you know, it is a majority rule which is called. So since 1st of July 2017 that we are following this religiously. So there is nothing new, that we are just bringing it back to you just to refresh your memories, because after 22nd September, this is going to be the most haunted thing, that every time that we got to see whether we have to apply the old rate or new rate while filing the 3B return for the month of September on or before 20th of October. Next slide, please. So addressing ITC and inverted duty structure, some of the FAQs, what they said, that will ITC be available for purchases made before GST rate change at the reduced rate? See, the problem is that you have received an invoice wherein that the rate applicable prior to 22nd September is there, but you have received the invoice after 22nd September. So whether you can take the full credit of 18% or the reduced credit at 5%. This can be a question. So it says that section 16(1) allows registered persons to claim the credit for the input tax on inward supplies used in business subject to prescribed conditions. If an inward supply was duly taxed at the prevailing rate at the time of supply, the registered person is entitled to claim the that tax credit. The ITC is credited to their e-credit ledger as per the section 49, irrespective of the subsequent rate change, provided other conditions are met. This is all the language, but the crux of the matter is whatever is the tax that is paid against that invoice is the recipient is entitled to avail it as a credit. Will refund of accumulated credit arising from the inverted duty structure for supplies affected up to the revised rate notification date be allowed? Because there are some sectors in which the product inverted duty structure has been addressed, like fertilizers, wherein the inputs were taxed at 18%, whereas the final product is at 5%. But now the inputs have also become at 5% from 22nd September onwards. So till 22nd September 2025, the inverted duty structure was in place. So whether such a refund is going to be allowed. So circular 135 clarifies that refund of accumulated ITC under clause 3, 2 of the first proviso to section 54(3) is available when the tax rate on inputs is higher than on the output supply. However, if the input output goods are the same, attracting different tax rates at various times, they do not fall under this provision for accumulated ITC refund. So this is a very tricky answer. One needs to understand by reading it once or twice. See what they are clarifying very clearly is when the product is at 18%, say for example 118 is what is paid on the input side, but when it is sold that the tax rate is 5, then inverted duty refund arises, that is going to be allowed. But if the same rate is there, but if the input and output goods are the same, attracting different tax rates at various times. See, there is a trader who has bought the goods at 100 but 18%, but selling the same goods at 100, but now it is going to be at 5%. So if the input and output goods are the same, but they are attracting different tax rates at various times, then they say that it is this provision of accumulated ITC refund is not going to be allowed. So if the inputs are at a higher rate and output is at a lower rate, input output being different, because input are the raw materials through which that you have done some kind of a value addition, finished goods are manufactured, and such a finished goods is sold at a lower rate, that is resulting in the inverted duty structure. In all such cases, inverted duty refund is permitted. But for in the case of a trader where that he buys and sells the goods, so when he bought the goods, the tax rate is 18%, but when he has to sell the goods, the tax rate is 5. The previous query has answered that whether he is entitled to 18% credit, the answer is yes. But whether he is entitled for an inverted duty refund because he has to sell the goods at 5 rupees, 5% tax, then the 13 rupees will remain in his hands as an accumulated ITC. So such accumulated ITC, whether it is going to be refunded under the inverted duty structure, then they are already clarifying in the FAQ that such ideas are not possible as per the law. Next slide, please. So, basis of special GST rate. Special rates are applied to select few goods, primarily sin goods and certain luxury items. Historically, most of these goods attracted compensation cess in addition to the GST. With the decision to discontinue the compensation cess, its rate is being merged with GST to maintain the overall tax incidence. So, for other goods and services, special rates apply where they already attracted the highest GST rate of 28%. But now I think this special rate is applicable only for the sin goods, but not even for the luxury items, because whatever is the luxury items that were earlier included under the 28% bracket, now they were brought back into the normal rates. But this 40% rate is only and only for the sin goods, but not for the luxury items. Let us see that how this rate has been. Of course, luxury means that our luxury auto are still under the 40%. So that's why that they must be seeing the sin goods and luxury, but most of the items which are there in the 28% bracket were taken away. So that's how the basis for the special rate is that earlier it is 28%, and then varying percentages of compensation cess was also there. But now it is going to be a consolidated GST rate of 40% IGST, or it is 20% CGST plus 20% SGST. Because why this 40% is a magical number that they have fixed? One may be wondering, but if you refer to the GST law, it very clearly says that the GST rate cannot go beyond 40%. That is already that we have set a rule. So unless you amend that the rate cannot go beyond 40%. But then you may be asking a question that earlier on the cars, the tax rate is more than 50%, particularly on the luxury cars, SUVs. So how that they were able to break this rule? So there also they did not break the rule. That is the reason they have come out with a concept called compensation cess. So the GST was at the time 28% only on all these goods, but they have compensated for the differential tax in the form of a compensation cess. Thereby, it has crossed 50%. So that's how that they have done. But since compensation cess has now got a sunset clause that it is not going to be applicable, so the highest rate that can be levied on any product is going to be 40%, and that's how this 40 number has come now. So all the special rate of 40%, the small background for it is like this. Next slide, please. So some of the technology upgrades in the under GST 2.0 which are proposed is artificial intelligence based invoice matching. They are going to provide you pre-filled returns, automated refunds, blockchain technology that they are going to use, and then chatbot help desks that they are going to create, and they are going to expand the e-invoicing. So the mandatory for all the businesses with turnover more than 2 crores, that e-invoicing is going to be made mandatory. But don't worry, sir, these are all press releases only. Relevant notifications, when they are announced from that date onwards, all these changes are going to be implemented. Next slide, please. So some of the key unresolved issues also let us see. The auto sector compensation cess, as I said, that this compensation cess has been now removed on the auto products. So all the cars are now going to be taxed either at 18% or 40%. So you know it that depending on their length, engine capacity, all that number, the car rates are going to be. So there are going to be only two rates, 18% or 40%. So in such a scenario, what has happened that there are huge stocks at the car dealers, and these supplies were made prior to 22nd September 2025, wherein the car dealers have paid the compensation cess. But you know the legislation around the compensation cess, that it can be availed as an input credit, but it can be put to use only when it is a product with compensation cess applicability is supplied. So in such a scenario only it can be utilized. Otherwise, the compensation cess will remain in your books only. So now for all these car dealers who are having the stocks prior to 22nd September 2025, substantial amount has been paid under the compensation cess. But from 22nd September onwards, the cars are not going to attract any kind of a compensation cess at the time of supply. In such a scenario, what is to be done with the money that is lying in compensation cess account is a big issue. So, as per the industry estimates, it is a 2,500 crore across India. So, whether it is official or unofficial, we do not know. But the government is thinking that how to compensate for this. But the car company OEMs may be asked to absorb this. That we got to see how it is going to happen, because they are bringing some parallel change in the credit note also. So maybe the OEMs will be, without linking to the past invoices, they can take advantage of the change made in the credit note in order to compensate the dealers regarding the compensation cess. So that we got to wait and watch. So regarding the intermediary services place of supply, amended rules now subject the foreign service providers commissions to reverse charge mechanism. So exports and service importers await clarification on valuation, documentation, and export incentive overlaps. So this is something which is going to be a problem, which I have already explained to you. So the reversal of the intermediary services, when intermediary services are received in India, they will be subjected to RCM. That something that we have to see. Cash flow issue will be there. So for the online gaming industry, the new promulgation and regulation of Online Gaming Act 2025 prohibits the real money gaming. But Supreme Court consolidation of the pending cases leaves the past liabilities and ongoing GST disputes in limbo. Now we have to see. Last week, you might have heard that the Supreme Court has called all the cases across India on online gaming to its bench. So the Supreme Court bench has already reserved the judgment on this online gaming in the last week of August. So all the rival parties have made their final submissions. Now, in the meanwhile, the government has come out with the new legislation by prohibiting the real money games. So, in this kind of a scenario, what is going to be the fate of this online gaming industry? Whether they are going to get any kind of a relief, or for the past period, whether the Supreme Court decision is going to have any kind of a retrospective effect, or what is going to be the fate of it, is something that we have to see in the coming days. And inverted duty legacy, while GST 2.0 resolves future IDS issues for fertilizers, textiles, pharma, settlement of the past refund claims and pending litigation remains uncertain for the affected businesses, because lot many cases are booked on the inverted duty refund. That in one of the webinars in the past that I have explained, that the whatever the government's subsidy, central government subsidy on the fertilizer was questioned by some states, and they have not allowed the inverted duty refunds, and on top of it that they have demanded GST on the central government subsidy on the fertilizer. So all these litigations are pending in several courts across India. But whatever is the rate rationalization the government has done under GST 2.0 is addressing going forward. But what about the past? So how these past issues are going to be resolved is something that we got to see. And e-commerce delivery services, a new service category separate from the GTA and the courier services, is being established. So what is that? You might have seen that when you have forgot something like your charger at home and you have gone to your office, and suddenly that you want that charger, hence you call a dunjo or a porter, somebody, then that person will collect it from your home and deliver it to you. So whether it is a goods transport service, or do you call it as a courier service? If it is a goods transport service, then he should have issued a document. But in this case, that there no document gets issued. But is it a time-sensitive document in which he is dealing to categorize them as a courier service? It is not so. But all these days, this particular segment of the service provider are subjecting themselves to 18% tax. Now that the dilemma is whether they should be treated as a GTA or they should be treated as courier service is the question before the GST Council. So in order to address and to categorize them, that the GST Council has proposed that a new service category is going to be coined for them, and what is going to be the definition, who are going to be covered under it, and if these services are provided through a e-commerce portal, how their taxation is going to be. All these things the government is going to come out with clarity. So we have to wait and see, but it is going to be separate from both GTA as well as courier services also, and is going to be a new line of service and a new definition has to be given to them. So this is something very interesting that we have to wait and see what is going to be the final print. Next slide, please. So some of the transitional challenges what you need to keep while running your day-to-day offices is that new tax rates are going to be applicable. Hence, you must update your ERPs. MRP labels are to be restricted or relabeled, leading to compliance costs. So already the government has issued a parallel notification wherein that they have already told that the new MRP labels can be affixed on all these products, and those products and the packing materials and the labels can be utilized till 31st of December 2025. And the other changes that they are, if there are any difficulties and all, the government is ready to listen and then come out with their answers and all, that they have given that kind of an assurance. So there is a query also in the Q&A that I could see in the chat box that it is a very cumbersome process, that all products relabeling is going to be difficult. So how to do it? But the law is the way it is. Hence, there is no shortcut for it, or there is no exemption given. Hence, all products which are required to be labeled are can be relabeled as per this provision given. But without that, you cannot sell them. So that is going to be treated as a violation. And accumulated ITC reversal, it's required to be done where the goods are exempted. Say, for example, some product is taxed at 12% in the past, and from 22nd September 2025, it is going to be at zero rate. So whatever is the accumulated input credit is there, that has to be reversed. So because the goods are now going to be exempted. Mind you, sir, in this GST 2.0, they have not given any goods at a zero rate. They have either said that it is exempt or that they have put it under the 5% or 18% bracket. But there is nothing called zero rate. Like exports are zero rated, wherein accumulated input tax credit need not be reversed. On top of it, it is going to be refunded. So in such a way, when a product is now exempted, then it is not zero rated. So there is a subtle difference, and legally also, that you need to understand that if the product is exempt, means there is no tax that is payable, but it is not a zero tax. So when it is exempt, no tax need to be paid, then no credit can be retained. Contracts are to be revised to pass on the tax benefits and to avoid the anti-profiteering scrutiny. So when anti-profiteering has got its own sunset clause, then why we have to fear for the anti-profiteering scrutiny? That, see, the government has formally given a sunset clause for the anti-profiteering, but that doesn't mean that the scrutiny will not happen, because time and again, after the rate rationalization announcement, all the authorities are saying that we are going to pass on the tax benefits to the end customer, and they have to pass it on, otherwise that they are going to take action. So there may not be any legal provisions for them, but they can always come out with some or the other problem Hence, it is better that we do our work at home, and to the extent possible, the tax benefits are extended to the end customer, because that is the intention of the government in doing this rationalization. So one must live up to their expectations, and suppliers need to be cautioned to extend the rate benefits downstream, and accumulated ITC encashment delays can be expected in case of rate reduction, and lower tax rate without ITC may hurt in some cases, because some of the rates, if you see 5% without ITC, 5% without ITC is dangerous, and restaurant services are now at 5% without ITC. So whatever inputs that they buy, all the tax has to be loaded into the price, and on top of it, the consideration should be subjected to 5%. Similarly, the insurance sector, where the life insurance are completely exempt, health insurance for a person are completely exempt, but whatever the input side services that they will take, all those services are going to be a cost to them, the GST paid on those services, because they cannot pass it on in the form of output tax, because the service rendered by them, the final service rendered by them is exempt. So in such a scenario, it is going to have an impact on the pricing. No inverted duty system refunds for service sectors, which could create fresh disputes. So wherever the 18% inputs are there on the input side, input services, but the output service you render has become 5%, then it is going to take a longer time for you to exhaust the accumulation of the ITC, and sometimes it may be difficult also. So there is no IDS refund for services sector, unlike for the goods. Hence, pure service players have must be having some issue that one needs to consider that also. So these are some of the initial thoughts on the new changes that were proposed. I think I have come to the end of my presentation. So other than the Mr. Anil's queries in the Q&A box, I am not seeing any. So I request all the members who are present now to post their queries in the Q&A, so that we can take it up one after the other. So as far as chat box is concerned, I think that I have covered all the comments made therein. Maybe some of them are missing. Maybe that I am going to cover it right away. How lower tax benefit will be getting passed on to the end user? That is one question, which I told you that you have to do your maths. 100 plus 18 is earlier, now it is at 5%. So are you going to increase the price? The government is watching. Second thing is that you have your competitors also. So when you are also placed, your competitors are also placed in a similar scenario. So is it that you are going to increase the quantity that you are giving, and keeping the same rate and at a lower rate, are you going to pass it on? Is something the marketing strategy which you need to see by seeing the competition, that you have to tune your methods. So there is no one rule which fixes all. So one needs to see that. And then credit note with old rate or a new rate to be issued. See, whenever you are issuing a credit note, the credit note should be always on the day. So the amount you can change to, if you want to compensate somebody, say for example, 100 plus 18 that you have made a supply, but suddenly that 50% of it has gone bad. Hence, you have to compensate him. So how you have to compensate? He requires to be compensated for 59 rupees, but now the tax rate has come to 5%. So whether you can issue a credit note with 50 plus 18% on it, or that you have to tweak it and say it is 54, on top of it is a 5%, or 56, on top of it is a 5%. It is something that you got to see, and you have to compensate the person, because the tax rate has changed. So when you are issuing a credit note, you cannot hold on to the old tax rate. You are issuing credit note today after 22nd September. Hence, you have to adopt the new tax rate only. Any changes in the GST return? No, sir. No changes were announced. Practically, stickers, entire stocks in market is impossible. How to handle? It will be treated as a violation, sir. You have to do it. How to handle the transit goods with GST 28%? There is absolutely no problem, sir, because the invoice was issued prior to 22nd September and e-way bill is also issued prior to 22nd September. Hence, it is a valid supply. Hence, absolutely no problem. Time of supply, as I told you, that the changes come. The changes come because of the transition, which you need to take care. So I think till how long do we have to wait for the porter charges clarification? Porter charges clarification. I am not able to understand this query. Are you referring to the porter who is a service provider in the market, or that you are talking about the portal changes? If you are clear on the porter charges, then unless the notification comes, we can't comment anything. But if it is to do with anything else, please clarify, because I am unable to understand. Janavi.
Janavi, I have enabled your mic. You can unmute and talk.
Hi. So I wanted to have a clarification where, like you have mentioned that the porter charges will be it will take some time for have a clarification whether the GST needs to be applicable on that or not. So till
No,
what
no,
time
you
it
are
will take?
talking about that goods
The porter
suppliers. That
charges, like
where
for
I gave an
example,
example of the you forgot a charger at home and
yeah,
an
yeah, yeah.
office, that kind of a services. Danjo
Yes,
porter.
yes.
Yeah, okay. See, for that the government has to come out with the definition of for these services, and then they have to spell out that who are covered, who are not covered, and how it is different from the GTA and courier, and what is going to be the, of course, the effective rate that they have already told, it is going to be 18%. There is no dispute about it.
But
But
do we have
what is
to
going to be
like?
the definition, who are going to be covered, and if these services are provided on a standalone basis or through a e-commerce portal, then what is going to be the changes and all that is something, unless notification comes, we will not be having clarity.
So as of now, do we have to deduct 18% and pay to the government, or how is it?
See, till 22nd September 2025, you continue what we are doing currently,
Okay.
because all these changes are proposed on or after 22nd September. So in all likelihood, in the coming week, we are expecting all the notifications to be out, because hardly that the industry will be having time for changing the ERPs. So if the notifications do not come in the coming week, hence we are expecting that the all notifications will be out in the coming week. So there will be some ample time for the industry to reflect all those changes in the ERPs also. So from that time onwards, that you can adopt the new change, but it is going to be 18%, as rate is not going to change. But only thing is that you will be having a new definition and new identity, because currently you do not know whether you are GTA or a courier, right?
Right, right.
So that is exactly now that you are going to be named. So naming ceremony is going to happen for you.
Okay, okay, sure. Thank you so much.
Right. What about stock available before change and sold after 22? Credit note reduction mandatory. See, the thing is that I told you very clear that you have to do the tweaking, that how it should be done is something that you have to see, and the competition will tell you what is to be done. So this is something 100 plus 18 you bought it, now that you have to sell it at 5. So whether you can sell the same product at 5, not possible, because that you have to compensate the customer somehow because of the benefit that you have got. So what is the method, whether you are going to increase, because you might have seen in the newspapers, so some of the people are saying, particularly in the FMCG sector, that for the same value we are going to give more. Say for example, 6 grams of some product is being given, like shampoo packets, you might have seen. So the 3 grams 3 ml shampoo is sold at 1 rupee. Now because of the rate reduction, maybe that 4 ml that you will be giving it. But this is something which you got to see, because there are some court rulings which said increasing the quantity is not that kind of a compensation that is that will satisfy the anti-profiteering. So we got to see exactly how this reduction can be passed on. It is a really tricky question, sir. But there is no one single answer because it depends on the products and the kind of marketing strategy you have, and you have to cover about the existing stocks at your dealers also. So it is a very tricky question. So there are multiple ways in which it can be done. So there are no other comments in the chat box. Now I am coming to the Anil's questions in the Q&A box because nobody else has put any queries. For intermediary, what is the GST change? I have already told that the place of supply rules are amended. Hence, it is going to be now the place where the recipient is. What is the process for reverse charge for amount paid to the foreign parties? Whenever you are paying to the foreign party, the services or the goods are received in India. If it is a goods, you know it that import duties are applicable. But if it is a service, then it is a reverse charge. So on receipt of the invoice that you have to create for reverse charge mechanism, you know it that self invoice needs to be generated and you have to pay it in cash, and subsequently you can avail it as an input credit. So the same rules apply. There's no change in it. If you are supplying through a gift city to foreign client, it is covered under exempt or zero rated. Under which section? See, sir, this has got nothing to do with the GST 2.0, but nevertheless, that I am answering. Gift city is a special economic zone. So when you are saying you are supplying through gift city, means is it a pass through or that you also exist in the gift city? But whatever it is, since it is an export, it is covered. It is a zero rated supply because foreign client is receiving it. So whether you are supplying from gift city or outside the gift city is not going to make any difference. So it is a supply, it is export, and export is zero rated. Is endorsement compulsory to get from the parties of gift city? I do not know which kind of an endorsement you are talking about. If you can clarify, maybe that I will be able to throw more light on it, because endorsement on what document is not clear. And the for credit notes raised, does it require to get confirmation from the recipient for the ITC reversal? See, this is what that they are going to de-link is what is that they have told in the press release. So unless the final notifications are released, we will not be able to comment anything. So these are from the Q&A that I could gather. What suggests to stockists to make stock of goods till 21 or not? To the extent possible, don't do it, sir. There are other ways in which that you can supply the goods. You might have heard a phenomena called sale on approval. So if you have to supply any goods, then you send them under sale on approval basis. So if it is accepted by the customer before 22nd of September, then you can issue a formal sale invoice and complete the transaction. But if the customer is not willing to take it, then you can call back your goods. So sale on approval is one interim measure that you can think of. So how to do the sale on approval and all is a complete process, but you can follow that. Now there are some queries. I do not know whether the registrants are now present in the session to now, because some of the people have already left. So what will happen to the inventory that has been produced by the company has been not sold to the customer by its distributor? So this is a question which I am answering in 2-3 ways. That is where the government has said that the new labels are to be fixed, and whatever is the benefit that has to be passed. So how you are going to sit with your dealer and how you are going to do this compensation exercise is something that the businesses have to come out. So in the press, what we could see is some of the FMCG sector product people are saying that we are for the same value we are going to give more quantity. So whether it is going to be a correct method or not is something that we got to see. Due to rate reduction, it is impacting only 20 to 30 paise reduction because ours is MRP based product. How to handle it? See, there is a rule which says that you have to round it off to the nearest rupee. So how you are going to do it is going to be a practical question, definitely. But you have to round it off to the nearest rupee and then see whether you are passing it or not. If tomorrow that the authorities are going to question, maybe you can say that because of this rounding, this has happened, but there is no deliberate intent on your part to enrich yourself. Maybe that can be some kind of an excuse that you can provide. Is there any change in the tax rates for BOPT? Separately, we have not seen, sir, because this is not there in the search. What is the status of various cess deployed on vehicles, tobacco, carbureted drinks after September 22? CBIC chairman has gone on record and he said that such accumulated compensation cess has to be written off. But of course, for tobacco products and all, because the same old rates are continuing, compensation cess is going to be still valid even after 22nd. That I think that they can make use of it. But as far as vehicles are concerned and carbonated drinks are concerned, I think whatever is the accumulation that they have to write off in the books. That is as per the press release as on today. But what is going to be the final picture, we got to wait and see. Request you to know benefits which we may reap from the supplies on both services and goods supply. Benefit, I think its question is completely vague. That what kind of benefits you are looking? Is it because of rate rationalization, or in general you wanted to know? That it is not very clear. How will state governments balance GST loss? See, sir, everybody is sympathizing with the state government, which is a very peculiar phenomena. GST Council comprises of the center and the states. Center has got a 1/3 voting right, and states are having 2/3. So it is not that at the because the states are losing, the center is gaining. It is nothing like that. Center is also losing, states are also losing, and it is a collective decision taken by all those who are present in the GST Council that they have to. So, if there is a loss, then everybody is agreed for the loss. It is not that nobody has told him, sir, that I have simply agreed to that unanimously, but after that I realized that I am losing. If somebody says, then it is a lame duck excuse, I say, because nobody can cry horse, because all of them are parties to this. And time and again, till 56 GST Council meetings, all the decisions are unanimous, means every single state has accepted it. It is not by majority that the decisions are dished out. All decisions are unanimous, means everybody has endorsed it. So all states have accepted that there is going to be a certain loss for them, and they've accepted it. So who is going to compensate? Nobody is going to come and donate the money. So what is the expectation for all these people to do the rate rationalization? We need to understand that what they have thought, that over a period of time, there will be a buoyancy in the market and more supplies are going to be needed. Hence, because of the volumes, we can make up. That's how the thought process is. So I think I'm clear that I have clarified all these things. There is one more query from Anil again. Invoice raised to units in the gift city. Do party has to get endorsement from the customs authority or the party? There is no such requirement of getting an endorsement, sir, because it is just like an SEZ supply. So when you are supplying to an SEZ unit, you don't get any kind of an endorsement or anything from the customs authorities. So gift city is no different. It is also an SEZ unit. So if you are supplying to a unit in the gift city, then it is just like any other SEZ supply. So you can supply it. That's it.
It is one of the requirement from our GST audit that they require that to get the endorsement from the party of SEZ units.
No. What kind of an endorsement that they want?
They wanted that it has been issued against LUT.
No, sir. You are wrong. At the time of supply, there is no endorsement concept. But whether your recipient has received it and consumed for the authorized operations is the endorsement that they want.
Okay.
Because you are not charging tax on them, right?
Right.
So in order to give you that benefit, what they want is the supplies were put to use at the other end for the authorized operations.
Okay.
That endorsement is there for SEZ also, no, sir?
Yeah, correct.
So same thing here also. No change.